Prices are down again. Retail's panicking. Headlines are flooding in with fear. And the same cycle is repeating. But smart money? Smart money's doing what it always does, accumulating in silence. Not because they're guessing, not because they're hoping, but because they understand what this phase means. This isn't a crash. It's a controlled reset, a manufactured silence before a seismic move. Look at the order books. Look at the wallet activity. Look at the regulatory breadcrumbs. While mainstream media pushes distractions and influencers chase hype coins for clicks, real capital is flowing into the infrastructure most people still don't understand. And at the center of that quiet storm, XLM and XRP. Now's not the time to second guess. Now is the time to go deeper than ever, to understand exactly what you're holding and why you may never get a second chance to catch this early again. Because here's the raw truth. Behind the sideways price action, behind the fake narratives, and behind the crypto is dead headlines, something massive is being built. Quietly, intentionally, globally. Ripple isn't just pushing payments. Stellar isn't just chasing remittances. These two networks, XRP and XLM, are being engineered into the backbone of a new financial operating system. And you're not supposed to see it yet, because if you understood how deep this goes, how many layers of regulatory alignment, institutional infrastructure, liquidity corridors, and CBDC pilots are quietly pointing to this very ecosystem, you'd realize this isn't about chasing a pump. This is about front-running a global liquidity shift worth trillions. So if you're only watching charts, you're missing the entire point. But if you're watching the plumbing, the deals, the partnerships, the integrations, you'll see it clear as day. This is where public tokens meet private infrastructure. This is where legacy finance hands over the baton to a new breed of programmable money. And this is where retail either panics out or positions for generational upside. If you're holding XLM and XRP right now, you need to understand something. You're not holding hype coins. You're holding tools of monetary transition. Infrastructure tokens with compliance baked in, liquidity built out, and utility being activated in real time. But most of the world won't see it until it's too late. So hit that subscribe button if you haven't already, because what we're about to walk through is going to shake weak hands, but it's going to ignite unshakable conviction for those who are really paying attention. This isn't hopium. This is infrastructure. This isn't guesswork. This is a strategy built over a decade. And if you're still here, you're not early. You're right on time. Let's get into it. Let's get something straight from the jump. XRP and XLM were never created for short-term speculation. They weren't built to ride meme trends. They weren't designed for retail flips or hype cycles. They were engineered to win a financial war. A war that's unfolding right now, whether the average investor realizes it or not. This isn't a war between blockchains. It's a war over the control of global value flow, who moves it, who verifies it, and who ultimately owns the rails it travels on. And in that war, Ripple and Stellar are not competitors. They are coordinated agents of a new system, a system that replaces SWIFT, obsoletes Nostra Vostro accounts, and rewrites the settlement layer of the internet itself. Let's unpack it. Most people don't know this, but Ripple and Stellar share the same DNA. Literally, Jed McCaleb, co-founder of Ripple, walked away from that project and launched Stellar. But he didn't fork the code to compete. He forked it to pursue a complementary vision. Ripple's mission? Build a bridge for banks. Unlock trapped liquidity. Help institutions move capital across borders in real time with trustless finality. Focus. Enterprise-grade infrastructure, regulatory alignment, institutional liquidity corridors. Stellar's mission? Bank the imbanked. Make value flow open source and accessible. Focus. Financial inclusion, low-cost remittances, open protocols, grassroots stablecoin access. Two very different fronts, but the same battlefield. What's changed now is that those fronts are converging. Ripple is no longer just for megabanks. It's moving into tokenization, CBDCs, smart contracts, and even DeFi infrastructure via its EVM sidechain. Meanwhile, Stellar is no longer just for remittances and NGOs. It's now onboarding licensed financial institutions, stablecoin issuers, and building compliant smart contract rails through Soraban. See what's happening? You're watching a bifurcated strategy where two complementary networks tackle the same global system from different angles. Ripple builds the enterprise pipes, directly integrating with banks, payment providers, and FX brokers. Stellar builds the permissionless yet compliant layer, where users, NGOs, and DeFi protocols operate with speed and transparency. And here's the big unlock. Together, XRP and XLM act like a cryptographic public-private key pair, one for closed, permissioned financial infrastructure, and one for open, programmable, consumer-facing liquidity. This is why the idea of XRP versus XLM is outdated. They were never at war with each other. They were always working toward the same macro objective: replace the old financial infrastructure with a digital native, instantly settling, globally accessible system of value movement. And the architecture to support that is already live. RippleNet is integrated in payment corridors across Asia, LATAM, and the Middle East. XLM is powering real-world stablecoin ramps via MoneyGram, Circle, and humanitarian projects with the UN. Ripple's CBDC platform is being tested by more than 20 central banks. Stellar Sorbonne is live, enabling institutions to issue real-world tokenized assets directly on-chain with compliance baked in. That's not a beta test. That's deployment. This is not theory. This is game-time execution, while most of retail is still watching meme charts and missing the playbook. So when you zoom out and really study what's happening here, Ripple and Stellar aren't just protocols. They are financial APIs for the post-Swift world. One is building trust bridges for institutions. The other is building utility rails for the rest of us. And both are being quietly woven into the architecture of global value transfer. And let's be clear, this transition is not being driven by hype. It's being coordinated at the highest levels, from central banks to BIS, IMF, global NGOs, and enterprise liquidity providers. Why does that matter for you as a holder of XLM or XRP? Because you're not holding volatile assets, you're holding claims on the infrastructure of the future. You're not betting on a coin flip. You're front-running a financial overhaul. So when retail panics over short-term dips, the smart money steps in. Because they know these assets aren't for speculation. They're for settlement, utility, liquidity, and compliance at scale. XRP and XLM are not about retail pumps. They're about institutional pipelines. And every partnership, every integration, every live transaction on those chains is one more brick laid in a new digital foundation. The average investor is going to realize it too late. But you're seeing it now if you're paying attention. The integration between Ripple and Stellar's ecosystems is not a coincidence. It's a signal. It's a map for where capital, compliance, and crypto are merging into one programmable, regulated, and instantly settling value layer. And XLM and XRP, they're already inside the system. Let's stop pretending. Right now, banks, governments, and most of TradFi are still publicly treating crypto like it's some fringe experiment. Useful for a few niche payments here and there, maybe good for retail speculation, but nothing serious. That's theater. Because behind the scenes, the very same institutions that dismiss crypto on TV are actively integrating blockchain rails into their next-gen liquidity infrastructure. They just don't want you to know it until they've secured their position. And guess who's at the center of that quiet revolution? XRP and XLM. Not meme coins, not pump and dumps, not yield farming tokens. Infrastructure tokens. Protocols built from day one for settlement, compliance, and real-time value movement. While retail debates the next 100x microcap, Ripple is working with over 70 central banks, payment providers, and financial institutions, building out its CBDC platform, liquidity hubs, and tokenized FX corridors. This isn't future-facing speculation. This is live infrastructure being deployed globally. Let's break it down with real moves, not hype. Ripple plus Hidden Road, quietly entering the FX war room. In what may be Ripple's most underappreciated move yet, they acquired Hidden Road, a $1.25 billion acquisition that barely made headlines in crypto. But to insiders, that was seismic. Hidden Road isn't a wallet. It's not a DEX. It's a prime brokerage clearing network, one that gives Ripple direct entry into the most sensitive layer of institutional finance. FX dusk routing, or to C settlement, liquidity provisioning, Institutional counterparty clearing. You don't spend over $1 billion unless you're going for control of the flow. And that's exactly what Ripple did. They didn't buy an integration, they bought the backdoor to institutional liquidity. That means XRP is no longer just a bridge asset for regional banks. It's a programmable, liquid asset with direct access to the arteries of global finance. Let that sink in. Stellar plus Palago Labs. DeFi without the Degans. Then there's Stellar. Quiet, efficient, always under the radar. And that's exactly how they like it. While Ethereum is still battling gas wars and trying to fit compliance into chaotic DeFi ecosystems, Stellar went straight to the institutions. Enter Palago Labs. You probably haven't heard of it, but you should. Palago isn't some DAO with a roadmap written in memes. It's a fully licensed institutional-grade DeFi platform built exclusively on Stellar. And here's the kicker, Palago just became the first to bridge traditional trade finance assets. Think letters of credit, receivables, and structured paper, onto the blockchain using Sorbonne, Stellar's new smart contracts layer. This is real-world tokenization, not theory. And they're doing it with full KYC, AML, and institutional counterparties. Palago is effectively turning Stellar into a compliant asset origination chain, exactly what BlackRock, Goldman, and every TradFi giant will eventually need when they tokenize everything from real estate to carbon credits. XLM isn't just for remittances anymore. It's a programmable settlement asset for on-chain finance with compliance baked in. MoneyGram plus Stellar, the global cash liquidity bridge. Let's go even broader. While everyone else is struggling to bridge crypto to fiat, MoneyGram is already doing it. With Stellar, we're talking USDC on off-ramps across 180-plus countries, embedded directly into the existing global cash remittance infrastructure. That's not a pilot. That's not a sandbox. That's a live, regulated, licensed fiat-to-stablecoin bridge operating at global scale. You can walk into a MoneyGram agent location in Ghana, Brazil, India, or the US and convert cash into USDC on Stellar, or cash out of it instantly. No bank account needed. No crypto exchange required. Now think long-term. That's programmable, compliant liquidity embedded into the real-world financial system. No friction, no middlemen. And XLM is the token powering that layer. XRP plus XLM, the financial plumbing of the future. So ask yourself this: how many crypto projects have real FX desk access, licensed liquidity bridges, CBDC pilots, DeFi apps with actual regulation, and global cash ramps live and scaling? The answer? Very, very few. And at the front of the line, XRP and XLM. Why? Because this next chapter of global finance isn't about speed anymore. It's about regulatory clarity, institutional trust, seamless integration, cross-border interoperability, on-chain programmability with off-chain compliance. Ethereum is powerful but congested. Bitcoin is battle-tested but inflexible. Most chains are either too slow, too chaotic, or too retail-focused to ever earn a seat at the financial infrastructure table. XRP and XLM, they're already at the table. Quietly, strategically, with live rails, compliant infrastructure, and institutional interest increasing quarter by quarter. You don't need 100 integrations. You need the right ones, and these tokens already have them. They're not building for speculative cycles. They're building to be the invisible pipes of the new monetary system, the kind of infrastructure that doesn't show up on CoinMarketCap headlines, but powers the future of global value transfer. You might not feel it yet, but the shift is happening. And if you hold XLM or XRP, you're holding keys to a liquidity engine that the world will soon rely on, whether they realize it or not. Let's cut through the noise. Smart contracts were never supposed to be casinos. They weren't invented to fuel dog coins, rug pulls, or yield farms with no purpose beyond Ponzonomics. They were meant to automate trust, to execute financial logic without intermediaries with precision, transparency, and speed. And while Ethereum opened the floodgates and proved what's possible, it also exposed the problem. Too much chaos, too little compliance, gas wars, hacks, clunky user interfaces, regulatory ambiguity. If you're a hedge fund, a government treasury, or a global payments processor, you're not building on that. You want predictability. You want security. You want compliance baked into the code. And that's exactly where Stellar Soroban and Ripple's EVM sidechain come in. Soroban, compliance-ready smart contracts built for real institutions. Let's start with Soroban, Stellar's long-awaited smart contract platform. Soroban isn't trying to out-hype Ethereum. It's not racing Solana for transactions per second. It's not focused on Deegan yield apps. It's purpose-built for institutions. What makes Soroban different? Built-in compliance hooks. Developers can create smart contracts with permission layers, KYC modules, and audit trails right at the base layer. High efficiency, low fees, no gas wars, no congestion, deterministic performance. Integration with Stellar's core ledger. Seamless access to tokenized assets, stablecoins, and real-time FX rails. Institutional design philosophy. Designed to power regulated DeFi, not speculative gambling. That's a massive shift. Because while other chains are obsessed with adoption via retail hype, Stellar is designing the foundation for composable, permissioned, enterprise-grade finance. Case in point, Palago Labs. We mentioned it in the last section, but now let's go deeper. Palago is using Soroban to issue tokenized trade finance assets, like invoices, receivables, and letters of credit. In other words, Palago is turning boring, multi-trillion-dollar, paper-based financial instruments into programmable digital assets, usable on-chain in real time with zero middlemen. This is not about retail. This is about transforming the plumbing of global credit markets. And it's all happening on Stellar through Soroban. That's not DeFi for DJs. That's DeFi for financial institutions. Ripple's EVM sidechain, Ethereum compatibility with institutional guardrails. Now let's talk XRP and Ripple's EVM sidechain. Why does it matter? Because for the first time ever, developers can now build Ethereum-compatible smart contracts using XRP as the native gas token. Think about that. XRP's liquidity, XRP's regulatory traction, XRP's global payment rails. Now programmable on a chain that speaks Ethereum's language. That means everything from asset tokenization to CBDC simulation, FX settlement contracts to treasury automation, can now be built using existing Ethereum tooling, but with RippleNet level enterprise guardrails. And just like Soroban, Ripple's not chasing the retail hype cycle here. They're opening the door for central banks to test programmable digital currencies, financial institutions to automate complex settlement processes, enterprises to integrate cross-border logic into tokenized asset systems. Why does this matter? Because until now, the world has treated smart contracts like a Wild West. Powerful? Yes. Trustworthy at scale? Not yet. But with Ripple and Stellar stepping in, we're entering a new era. The era of composable compliance. Composable compliance, the next phase of blockchain utility. This is the unlock most of crypto is still missing. We're moving past DeFi V1. We're moving past NFT speculation. We're entering the phase where programmable money becomes the default, but not in an anarchic, unregulated way. Institutions want rules plus programmability. They want transparency plus privacy. They want flexibility plus compliance. Soroban and Ripple's EVM sidechain deliver exactly that: code that executes business logic, on-chain rails that settle value instantly, compliance frameworks that meet regulatory standards, programmable functions that enable automation at a scale TradFi can't match. This isn't a future vision. It's happening now. And what tokens are securing and running these smart contract environments? XLM and XRP. Not as speculative assets, but as the monetary glue between on-chain logic and real-world value. Not Ethereum killers, there's something entirely different. Let's make this crystal clear. This is not about killing Ethereum. This is about building a different layer of utility. Ethereum remains the king of Open DeFi and Web3 culture. But XRP and XLM? They're staking their ground in enterprise-grade programmable liquidity. That's a completely different vertical. And the TAM, total addressable market, is enormous. We're talking trillions in cross-border B2B payments, trillions more in tokenized real-world assets, a complete overhaul of international trade finance. global CBDC infrastructure experiments, fully digital, compliant treasury management systems, all of which require smart contracts with rules, reliability, and regulatory alignment. And that's what Soroban and Ripple's EVM chain deliver. The bottom line: while most retail investors are distracted by which meme coin might 10x next week, Ripple and Stellar are turning smart contract narratives into real infrastructure. They're not just building tools, they're building institutional grade frameworks that unlock capital, automate trust, and settle value across borders, with real regulation and utility in mind. And the tokens XLM and XRP aren't hype bets. They're access keys to programmable, compliant liquidity rails that are already being integrated into the financial machinery of the future. You're not too late, but you might be underestimating how deep this goes. Scarcity, suppressed prices, and what happens when they lift the veil. If you're watching the price of XLM and XRP right now and thinking, why isn't it pumping? You're asking the wrong question. The right question is, who's suppressing price and why? Let's break it down. Ripple still faces sell pressure from legacy escrow unlocks and coordinated FUD. Meanwhile, XRP has been systematically delisted from U.S. exchanges for years due to SEC lawsuits, cutting retail access just as institutions began test integrations. Stellar? Quiet, barely marketed, focused on enterprise traction, not hype. But here's the key. Scarcity is building underneath the hood. Ripple's on-demand liquidity volumes are breaking records globally, even with limited retail exposure. Stellar is being used to mint USDC, now seeing increased issuance via Soroban-powered apps and UN disbursement projects. Wallets holding long-term XRP and XLM balances are accumulating, not selling. New XLM supply is fixed and deflationary through burn fees. Ripple's XRP escrow structure means long-term scheduled releases, not inflationary random dumps. So what happens when Ripple wins its final legal battles? XRP is relisted in the US? Stellar integrations hit broader headlines? Or when one BlackRock-sized player starts routing liquidity through these chains? The price doesn't climb, it detonates, because the fundamentals are already there. The infrastructure is already built, and the supply side is already tightening. All it takes is the veil to be lifted, and we're not far from that now. Section 5, the tipping point, what's coming next for XLM and XRP holders. Here's what most retail won't be prepared for. This market won't give you multiple signals. It will happen all at once. The final convergence of banking partnerships, CBDC integrations, FX corridors, and smart contract activations is not years away. It's already in motion. Here's what's next. Ripple's integration into real-time treasury rails with institutional partners like Santander, SBI, and HSBC, using XRP for global FX clearing. Stellar-based tokenized asset markets going live in Asia, Africa, and Latin America, thanks to projects like Palago, RealFi, and MoneyGram plus USDC. Full relisting of XRP across U.S. exchanges after clarity or settlement with the SEC. Mainnet launch of enterprise-grade DeFi on both Soroban, Stellar, and Ripple's EVM sidechain. Public-private testnets with BIS, IMF, and central banks leveraging both protocols for cross-border programmable money. At that point, price becomes the least interesting part of the story, because value will no longer be based on hype. It'll be based on integration, volume, and velocity.